Player who famously predicted the subprime mortgage crisis, to see what he's looking for in the markets in 2025. Joining us now is Kyle Bass. He's founder and CIO of Hayman Capital Management. Kyle, good to see you. So broadly, looking at U.S. but global markets, what are the major themes that you expect to be most impactful in 25?
Yeah, I mean, John, I look at the world a little bit differently and think about equity indices performance. But I think when you look at the financial architecture of the world, the inflation that the U.S. just pushed to the world from, call it 2021 to 2023, had a real negative effect on all of the global economies outside of ours. So we know how we're struggling here to make ends meet. Given 40–50% inflation across the U.S. board. In emerging markets, things are worse. And so when you see, again, the financial architecture of the emerging markets, I haven't seen it this bad since '98 and even earlier. So I think that you want to focus on staying invested in the United States tech arena specifically. And something that's really, I think, going to emerge as a theme over the next couple of years is you're going to see U.S. digital manufacturing. What Musk is doing with Tesla and SpaceX and the way that they are manufacturing a lot of these parts and very specific industrial items, I think you're going to see a resurgence in U.S. industrial manufacturing from the digital perspective, like 3D printing, things like that. So I'm very bullish on the U.S., and I'd be very wary to be spreading your capital across the world today, given the ground war in Europe, the fight between Israel and Iran, and a potential fight between China and Taiwan coming in the next.
So given that, do tariffs protect U.S. exceptionalism, or do they make the whole global situation more tenuous?
Yeah, I think this is an important debate to have. We are no longer running a massive surplus like we did going into the Smoot-Hawley tariffs. We're no longer attached to the gold standard, and this isn't the U.S. Pre-Smoot-Hawley. We are a massive trade deficit running country where we have the global store of value and the hegemonic currency. I actually think that tariffs now will act in a very different way than they acted in the past. And again, when you think about the rationale for tariffs, if you just think about the last time Trump engaged in tariffs, specifically on steel and aluminum, and if you remember, Biden ran on a platform of saying he'll immediately unwind those tariffs, and he never did. The reason he didn't is because China specifically is a state actor, and a state actor that is, let's just say, not one of our friends. And they can act uneconomically to put some of our industries out of business if that's what they decide to do. They can act in non-market terms. So when they start dumping steel or aluminum because they want to be the global, let's say, manufacturer of steel and aluminum, and they want us to rely on them for those things, this has to be something that the new president coming in must be thinking about tariffs from both a national security perspective and from a global trade perspective. So I think you're going to see tariffs act more positively this time than they have in the past.
Given your view of China and how outspoken you've been about TikTok, what do you make of President-elect Donald Trump's request to stay the decision to force TikTok to divest of its U.S. operations?
Yeah, I think the Supreme Court may decide this for him. I think, we hear oral arguments. I guess they begin January 10th and the deadline's January 19th. I read the appellate court ruling, and it was pretty unambiguous. It has nothing to do with free speech. It has everything to do with national security. And when you read that appellate court ruling, I can't imagine that the Supreme Court would flip that ruling. And I think that President Trump and his team this time got TikTok, let's just say, to play more fair in the election. And I think that is weighing on the thought process.